I never know what my next guest is going to say, and that's why I really enjoy talking to him so much. He is the host of RT's Keiser Report, and he is considered one of the most influential voices when it comes to Bitcoin. He is Max Keiser, and he joins me today. Welcome to the new show, Max. Good to see you.
Well, Daniela, this whole new setup really agrees with you. I've never seen you look more radiantly beautiful.
Well, thank you, Max. And I see that you're relaxing. You look great. You're still enjoying quarantine times.
Lockdown is great. I'm perfecting my keto baking skills, and we've got everything we need here. We've got drones coming in 24/7 with fresh supplies. We're doing our show here. It's the greatest time of my life.
Amazing. And I'm still waiting for that keto cheesecake. But we have a lot of ground to cover today since it's been a while since we last spoke. And I want to start with a quote that I read this week from you, where you said that Earth is at an important inflection point right now. That sounds so critical. Max, what do you mean by that, and how should we prepare?
Right. So I was talking about debt, right? And so the debt around the world is now, I think, at a point where the additional debt creation and everything that goes with it, the money printing, will spill over, and we'll just start to see increases in CPI without any delay, right? So we're seeing it now. We're seeing the price of basics like food start to go up in real time. People are really complaining about CPI, about inflation in real time, and the prices for stuff that people actually use are starting to go up in a meaningful way. And the central banks are they've painted themselves into a corner. There's not much they can do about it at this point. And because there's just so much debt you can create in one, the Earth's, let's call it a $100 trillion global GDP. They've got more than that they've printed up to try to assuage the banks, and to try to hide the fact that banks are technically insolvent. All the major money center banks around the world are technically insolvent. We just had that FinCEN report come out, which was an expose from a whistleblower talking about trillions of dollars being funneled by the major banks into money laundering and terrorist financing. And the biggest names are mentioned, like Deutsche Bank, JPMorgan, our old friend JPMorgan, of course. And so I think we're at the inflection point. Now, what does this mean, broadly speaking? You look at that bond market rally we've had since the early 1980s. And I think that, a lot of people have made this wrong call by calling a top in the sovereign bond market now. It's a widowmaker, as they say on Wall Street, by being wrong. I've been wrong for 5 or 6 years on this. But I think ultimately, there's just no appetite for this garbage paper anymore. Fiat money has reached its end game. The nation state has reached its end game. The rise of Bitcoin is now becoming extremely important. You saw the news of Michael Taylor over there at MicroStrategy.
Yes, Michael Saylor. Yes, I want to talk to you about that too.
Right. So that's what I mean by it.
So, yeah, the numbers are just staggering, right? Like the debt numbers, it just seems, it's just, like, how do you even get out of this, right? Is it just a horror movie unfolding here, Max?
Well, it's being perpetrated by interest rates continuing to go down, and you got that 0% interest rate. So even though in America the debt has ballooned by trillions of dollars, the interest service on that debt has actually decreased in the last year or so because rates are gotten even cheaper. So it gives this false sense of security that debt doesn't matter. You can just do this forever. But the fact is that when you have distress in these bond markets, like we saw in 2008, that there's a credit freeze, and overnight rates in 2008, they went up to near 10%. We saw the repo market went through a tremendous dislocation not only within 2 years ago, and the overnight rate went up to 5, 6, 7%. So, and these things happen very quickly. And the debt also means instability, right? If you're over indebted, that means you're not on a rock solid foundation, and it doesn't take much to cause a lot of stress. So the global COVID epidemic is certainly getting into phase 2. You've got banks now in Europe. The European banks look so bad, Daniela. Their balance sheets are so impaired. Deutsche Bank, it looks like they're going to go the way of Lehman Brothers. So you get a major meltdown like that in the banking sector. And now, oh, rates are now 2 or 3%. And oh my gosh, bond market's down 10, 15, 20%. And, you know, we're off to the races into a major global correction and slash depression.
And you mentioned the word inflation before, and, you know, Alan Greenspan, former Fed chair, coming up before saying that's really what we need to be fearing. But I actually have Jim Rickards on after you, and he says, hey, that's something that the Fed would want. They're trying to get to an inflationary point, but it's not going to happen. We're actually going to be living in deflation. How do you see it?
Right. You have inflation, deflation, and hyperinflation. So in my view, we're heading into inflation bordering on hyperinflation, which would mean currency collapse. So the US dollar, as long as it's in good health, they can pretend that the world is suffering from deflation and that they need to hit this 2% inflation target. And they do that by essentially cooking the books, right? They don't include stuff that goes up in price, like healthcare, education, or things that people actually need or want. They do so by including things in the basket for CPI, textiles from Asia, or they'll say that your computer is twice as fast this year, so it's 50% cheaper. So they calculate that, you know, it's a hedonic adjustment, as they call it. So this 2% inflation is bogus, a number. You know, another way to look at it, and Michael Taylor made this point, looking at the statistics and the numbers, you know, that 6, 7, 10 years ago, you could retire with $1 million with a 5% coupon and get $50,000 a year in income. Now you got to get $20 to $25 million, right?
So you,
to get the same amount of income. So you're telling me, well, 1 million, 20 to 25 million is certainly more than 1 million. And that's another way to look at it. And that's you could say that's inflation, right? If you look at the government statistics and the way they interpret these numbers, as far as Jim Rickards, you know, his view of things, he is saying that the government would love to inflate away their debt. Mm-hmm. He's saying that the bond market is deteriorating faster than they can print money. So if you add those two together, it looks deflationary. And so what I'm saying is that I believe we're at the end game, and that in fact, we're going to see a crack of major proportions. And then when that happens, you end up with a currency problem, and you end up with a huge bond collapse. And so that's where I think we maybe part ways a bit.
So, you know, you brought up Michael Saylor, and yes, we've seen him move his company from cash all into Bitcoin here. Is that the future? Are we going to see more of this happening, Max?
Right. So Michael Saylor is an established CEO. He's been at that company for decades. He's the longest serving tech executive in the industry. He had $500 million of cash on the balance sheet. Yep. And like a lot of companies, he's figuring out what to do with this cash because interest rates are very low. It's not productive, really. And he did something remarkable that no other CEO in America has done yet. All the other CEOs look at their huge cash position and they say, you know what, we're going to buy back our own stock. Not only that, we're going to borrow money at 0% and buy back our own stock. And we're going to boost our share price. And oh, by the way, all the executives that have stock options, we're going to boost our stock option value as well. So we're going to take advantage of the Fed and their policies that I think, to be generous, you could say are rogue and destructive. That's about the nicest thing you can say about it. So, but Michael Saylor is saying, wait a minute, I believe that we're at the end game and that this money printing is going to fail to keep the genie in the bottle, and we're going to see inflation happen for real. So I'm going to put my money to work in a way that essentially takes the counter position to what the Fed is doing. And I looked at gold, I looked at Bitcoin, and I did crunch the numbers, and I decided that Bitcoin was the harder money of the two. It had the greatest upside of the two. As Paul Tudor Jones called it, it's the fastest horse in the race, right? Paul Tudor Jones came up with the exact same conclusion 6 months ago and went long Bitcoin. He put 1% of his portfolio in Bitcoin. So a lot of the smart money, Ray Dalio is putting a big percentage of his money into gold, right? So he sees inflation coming. A lot of money managers, you see Warren Buffett is got a stake in a gold mine, Barrick Gold. He's also diversifying out of the dollar by putting a lot of money into Japan. That would indicate he's less sanguine about the future of the dollar, right? So that's inflationary right there, potentially. So a lot of the big guns are moving, reestablishing new positions anti-US dollar.
And and I know you've been tracking Buffett from the 80s.
Yes.
So you saw this move. We all know he never embraced gold, and now he was taking a stake, albeit not huge, in Barrick Gold. Was telling for you.
It was also simultaneously dumping a lot of bank stocks, and really just rejiggering his entire portfolio. He dumped a lot of bank stocks. He got in completely out of Wells Fargo. He's got maybe some Bank of America left, but they bought Merrill Lynch, and I think Merrill Lynch is capitalizing on this day trading craze. You see it, the Robinhood traders and all that other stuff. So I think the revenues, I haven't looked at those numbers, but that's probably why he still has a piece of that. But on balance, he would appear to be dumping bank stocks, which has been his bread and butter for decades. He's been really heavy into bank stocks, and American financial stocks has really been a core investment for him. Those have been dumped. He started nibbling at Barrick with a position in GOLD, gold. That's the symbol, right? And he got into these Japanese stocks in a big way. I mean, a huge way. 5% of five major of these conglomerates in Japan, and he's hedged his yen exposure in a way where he's essentially making a bet, taking him out of a dollar exposure. So he's going, it's funny because for a long time, Buffett would always say, never short America, never count America short, always believe in America. And yet based on his most recent activity, he is running full galloping away from America and the dollar.
Max, you have famously said, let Bitcoin do for you what you cannot do for yourself, and that is get rich.
Right.
I know you're all stocked up in Bitcoin. You feel comfortable in silver and gold. So what are you doing these days with Bitcoin? You're just hodling. Hodl.
Right. So with Bitcoin, we're fully invested now. Many years ago, it's like, as a prudent portfolio manager, that Bitcoin piece has dwarfed everything else by the fact that it went up by more than 100,000%. So, it is what it is. But I still like gold and I still like silver. And I am adding to two areas in the stock market. One would be miners, precious metal miners.
Nice.
The fundamentals are outstanding, right?
Like you mean the majors? Like, do you like the big companies, or you like developers or juniors? Who do you
because
like?
Because I'm lazy, I like 5 or 6 of the ETFs.
Ah, okay.
Right. So that you got two big ETFs in that space. You've got a couple of that cover the juniors, et cetera. And also in that business, as you know from tracking it for a long time, the mining business the management sometimes can be disappointing at times. Let's just say that. And, I think having an ETF makes a lot of sense in the mining business because you need diversity. Usually diversity is not a great, friend. But in this case, because the management in these companies there's a few outstanding ones. You talk to them often, but a lot of times, it's a tough industry. And there's political uncertainty. There's political risk. There's
definitely. If you're in the mining stocks, you definitely need to do your homework and be on top of it daily. So I hear what you're saying.
Yeah, it's a total commitment. So right. I mean, all I know is that the fundamentals are compelling. The ETFs are good. So that way, and then also in the software sector, you've got companies who are really, capitalizing in the cloud. Right. So you've got companies like DocuSign, which is capitalizing magnificently in the cloud. You've got Zoom video calling, which is a COVID star. You've got, of course, Amazon is going to continue to do well. And you've got other companies kind of in that space, emerging companies, software companies, where the margins are high and the compounding of their profits is strong. And the economy is dematerializing, right? So we're moving away from stuff and we're moving more into digital space, more into the cloud. So companies that are gatekeepers into the cloud are going to continue to make big moves.
And, in the past, I know we spoke about Bitcoin forecast. Originally it was 100,000. You recently bumped that to 400,000. And you say Bitcoin will compete with gold. So have you upped your forecast for gold since you've upped your forecast for Bitcoin?
Sure. Look, I mean, I would piggyback. You mentioned Jim Rickards earlier. His work on gold, I would, point to as the best out there. He makes the case for a reset in the global economy and gold trading to 10,000 or above, based on the need to get into like a new Bretton Woods type situation to do a global reset for the global forex market, and they're going to go back to gold. And I think that's correct. And I think you're going to see $10,000 in gold. And so with Bitcoin, we initially came with a $100,000 target back in 2011, looking at it as competing with gold. Even back then, we suggested that this could be a digital asset that would compete with something like gold. And then recently, as the fundamentals of Bitcoin became even better than they've ever been, I said, okay, well, I think they are a shot to be trading alongside gold as possible. So we should say 400,000 is a target that would put Bitcoin pari passu with gold. And so that's how we come up with that number. Obviously we're at the current price, that would be a 40x move or so, and that would be an unbelievable move. So I don't think it makes sense to go beyond those types of forecasts. I mean, you're already talking about an incredible asset.
No, I think it's just funny because, now when I hear forecasts like 10,000, they almost sound bearish and compared to what others are coming out with. I mean, people are just so bullish on gold these days.
Yeah, well, that's a long time coming. You had the problem. All of these fines that these banks are paying for manipulating gold price have been a factor. If you look at the gold price going back, 6, 7, 8 years, it would always track really the debt increase, and you'd see gold rising along with that chart that shows rising debt. Then after the 2008 crisis or so, you saw the debt would keep going up, but gold was going sideways. And that's a direct result of what we now know categorically and provable of manipulation. The gold bullion banks, the major city and the bank and JPMorgan, these banks are actively involved in gold suppression, and they've paid a lot of fines. That just today, news breaking, JPMorgan paying $1 billion for manipulating the price of gold. That's a headline. And I've been talking about it for years. You've had guests on talking about it. And that's why gold has been throttled. And if in fact it's allowed to trade based on its historic relation to the overall debt in this economy, it would be at $2,500 to $2,700 an ounce today. That would be the price you'd expect for gold, given the level of debt in the system. If there's a premium above that, where people are saying, hey, I'm going to look out 5 to 10 years and I see the debt compounding at such and such, you'd already be at $3,000 an ounce gold or $3,200 an ounce gold. Once the facade cracks and we're allowed for genuine price discovery in the precious metals market, you're going to see a huge gap, and you're going to start to see very quickly get to a normalized price. Interest rates will get very quickly to a normalized interest rate, which will be a lot higher than they are right now. And this, unfortunately, in 2008, Daniela, the regulators didn't decide to regulate and to curtail what the banks were doing to disrupt the economy and over leverage the economy. Instead, they made them too big to fail and too big to jail. And they increased their credit credit capacity by 10 to 20x. And so they went out and they did the exact same thing that got us into trouble in 2008, but 10 to 20 times worse. And now that's falling apart, as we've all predicted it would. And now here we are.
Max Keiser, biggest misconception out there surrounding Bitcoin, and one that drives you bonkers?
That it's not backed by anything. Of course it's backed by something. It's backed by energy. Energy backs everything in the universe, and it backs Bitcoin. And, with 100 quintillion calculations per second that maintain the Bitcoin network is supplied by the miners, who are fed by energy. And what's great about this industry is that it seeks the lowest cost energy on the planet. That's why 70% of the energy that goes into Bitcoin is renewable. It's solar and wind, and that number is going higher. The second thing people make mistake in is that they equate Bitcoin with everything else in the industry, all these other altcoins, as they're called, which is false.
Right.
If you just look at the fundamentals, Bitcoin's got 93% of the market right now of proof of work coins, which are the only coins that matter. And then if you look at the amount of the energy uses that it uses, the hash rate, it's much higher than that and going to 100%.
You mentioned the altcoins, and we can wrap on that point because I was reading something where you said, you know, their sole purpose or you know, reason that they exist is to steal your Bitcoin. You make
That's
them seem like
exactly
some
right.
evil robots.
Well, they're scams, right? So every industry, a successful industry, attracts scams. I mean, look at the mining industry, for example. Not to pick on them, but we know. I've been on Wall Street starting in the early 1980s. You know that how many penny stocks from Canada listed on the Toronto Stock Exchange have we seen, where it's a guy standing over a hole and he decides to go public, and then he disappears. I mean, that story's been told 1,000 times, right? I mean, that's why it requires
Unfortunately,
incredible.
yes.
Yeah, it's not. I'm not making this up. So, Bitcoin emerges and it suddenly becomes a multi-billion-dollar asset. Now it's a $200 billion asset, and it brings out the scammers. And they say, we've got the new one, the penny stock equivalent here. Here's this, blah 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 blah. And they're all scams. They're all scams. They're all exit scams. They're all to
And
be
you put
avoided.
Ethereum in that group?
Yes, Ethereum is an exit scam. Ethereum is a scam. It has no established use case. There's no reason for it to exist at this moment. It's not money. It should never be considered money. It's just some software that some people use to do stuff. But I mean, I have software on all kinds of computer products and applications. I don't think of it as money. It's just software, you know.
Max Keiser, always enjoy speaking with you. Thank you so much for coming on. I told you so. I know you always tell me so. I know. That's why I keep inviting you on, because I keep learning from you. Thank you so much, Max.
My pleasure, Daniela. Anytime.
Yes, we'll see you soon. Hopefully back in New York City.
Oh, lovely. All right. Bye.
All right. See you soon. And see you tomorrow. We'll have much more content for you. Be sure to follow us on all our social media platforms, Facebook, Instagram, LinkedIn, and Twitter. We are there. For Stansberry Research, I'm Daniela Cambone. See you soon.